Hi, this is Zach Mayer with the Bulletin Board here at Zach's Traders Cafe for Monday, the 17th of March, St. Patrick's Day. I'm sure people are already drinking the Guinness at this point. And starting off with the FTSE 100, where we're back above the old February support there. 8,600, we're above the 50-day moving average, 85.90. And above that zone, looking for obviously a retest of the best levels ever towards the 89.20 area. 89.10 area, in fact, and best case scenario target up to 90.70 by the end of next month. End of day close back below the 50-day line, and we're looking for support around the 84.80 level, but with that sharply rising 50-day line and the break back above previous support, this is looking rather better than it has done for a week or two. The other point to note, if you're cautious though, is to wait for an end of day close. The RSI back above neutral 50, it's just below that at the moment. Moving on to the DAX, and here you can see that we are consolidating in a range between 22,200 and I suppose the highs 23,400. We are expecting a move to 24,000, maybe as soon as the end of this month, but more likely by the end of next month, and feeling bullish on the basis of at least 2/3 bounces for the RSI at and above the neutral 50 level. The last time we had that kind of behavior was at the end of December, beginning of January, and obviously that delivered an almighty bull run. Moving on to the Dow, which has been the problem child, and obviously I looked at it yesterday, nothing's changed since then, but worth a reminder, we are between the old support there from back in November, 41,600, and September support there at 40,000. Difficult to say how we'll emerge from that, but with the rising 200-day line and also after going into oversold territory on the RSI, that tends to be a buy point. It has been in the past, especially back in April last year, which was the last time we were this oversold. I suppose we were also oversold back in the middle of December. The initial task here, though, for this market, obviously, is to get on the right side of that 200-day line, and that's just basically around the 42,000 level. That's the initial target. We'd be delighted if we can get back to 43,000 by the end of this month, which is the floor of that broken uptrend channel, trend channel there from back in March last year. Moving on to Bitcoin, which is probably the most exciting situation at the moment, given that somebody's decided to take a massive punt on going short at 84,000 and looking to buy back at 69,000. Let's see if that whale of a trade will be successful. But in the meantime, we've got the floor of the rising trend channel there from March last year at around the 80,000 level. We've got resistance and the current trading range around the 200-day line. If we emerge and get a decent end of day close above 84,000, looking for the old support area at 90,000. On the downside, the most obvious area of support is not 69,000, but 73 to 74,000, which was March to November resistance. Moving on to gold, where people are probably presumably still telling us, because they can read, that gold is above the $3,000 level. What's more interesting is that the top of the channel there is heading for 3,040, and we're looking at that hopefully by the end of this month. After that, we'd expect a much sharper acceleration to the upside, probably along the lines that I'm about to draw at the moment. So an uptrend line and a channel there from back in January, and then heading up towards wherever the resistance line projection there goes from the end of last year, which is heading, I suppose, towards 3,200 as a best case scenario target by the end of next month. The other point to note, and what drove the latest rally, is the way that we had an RSI 50 rebound, and that is going well. Moving along to the stocks, and starting off with Avacta, which for a change is actually looking quite intriguing and exciting, which is on the basis of the inverted head and shoulders that we've got there, neckline resistance at 42 pence. Above that, we are looking for potentially a move up to the 200-day moving average at 54 pence. Maybe by the end of next month, hopefully rather sooner than that, but end of day close above 42, the trigger, and that is accompanied by the RSI going above neutral 50. So it's 53 at the moment. It hasn't been above neutral 50 since the end of January, and obviously in a bear market or a bear trend, the RSI remains at 50 or below. So that is looking encouraging. Ideally, we don't even go back below the neckline support there at 37 pence ahead of a move to 54 pence. Maybe it'll be the type of spike through the 200-day line that we had back in January. Moving along to Block Energy, which had an announcement today, which I didn't cover, but covering the stock here at least. And here we're finding support basically at and above the old January resistance around 0.83. Above that, looking for the top of a broadening triangle there from back in July, as high as 1.25 pence by the end of next month. So that's also backed by three RSI rebounds at and above neutral 50 that we've had since February. So very keen on that one, on that basis. The triple bounce there for the RSI, as well as the shares finding support above old resistance. Onto a stock, which I've never covered before, and not the type of stock I normally cover anyway, on the basis that it's a 700 million market cap. But we've got CVS Group breaking through or breaking towards the resistance there at £11. End of day close above £11, and we could be looking for the top of that rising trend channel from October as high as £14 by the end of next month. Obviously, we want to stay above the 200-day line there at £10. So you're risking ATP to get, around £3 there of upside. Moving on to Cap AI, and although it wasn't a surprise that the shares broke through the resistance there from the end of January around the 0.06 pence level, perhaps the magnitude of the rally since then has been the thing which is noteworthy. You can see that we're approaching the best case scenario target there, 0.19 pence. Hopefully we'll do that by the end of this week, and we need to stay above the latest support and resistance levels around 0.12. Obviously the old target there, 0.11, a potential support point as well. Onto a real favourite at the moment, on the basis that the fundamentals and the technicals have aligned. What's interesting here is we've got an unfilled gap to the upside off the low. We also had a gap close by signal back in November at only 0.5 pence. So 0.5 pence potential entry, and then 0.75 pence, the second potential entry. Gap closed there at 1.5 pence. So it was another signal at the beginning of this month. And first target here was 1.75 pence. Second one up to 2.6 pence, which we got rather close to today. And on the litigation funding news, and obviously if we break 2.6 pence, it could be up and away. There's nothing really on the chart between 2.6 pence and 4 pence, the old support there from 2023. So this looking very good indeed, if only on the basis that that calamitous fall in October would meant that there are hardly any sellers left at all, just only buyers for the shares or people short covering. Moving on to GCM, which is another Bulletin Board Heroes winner, a rather volatile mover though, but we noticed the V-shaped bull flag on Friday, and we've managed to break our second target there at 3 pence, above 3 pence on an end of day close basis, looking for up to the next target there as high as 4.25 pence. Hopefully we'll get that by the end of this month. You can see that Friday's price action was very strong on the basis that the shares opened at the low, closed at the high, and we've had an RSI 50 rebound. So everything there, plus even a gap through the 200-day line, which you don't see very often. That stock looks like it's one that is certainly a bullish situation happening there. Moving on to Huddled, which is gapped up with the 50 and 200-day lines both rising. That suggests we're going to a golden cross maybe later this month. We've also got two RSI 50 rebounds, looking for the shares to initially hit 3.8 pence, and the second target there up to 4.8 pence, hopefully by the end of next month. On to Illika, which I probably covered too much, but the cupboard is relatively bare at the moment. So bouncing off a rising 50-day moving average there, rising trend channel there from October. Best case is that we head up to 55 pence by the end of next month. That looks a little bit optimistic, but if we do get a break of the RSI back above neutral 50 versus 47, that could be the right time frame, and the trajectory could also be correct in terms of that rising trend channel. Obviously, below the 50-day line, below 31 pence, cancels that scenario. Moving on to ImmuPharma, which had decent news last week, just trying to see now where the floor of the channel is, and it looks as though it's around the 3 pence level. If you're cautious, be waiting for an end-of-day close either above the 50-day line there at 3.85 pence, or the resistance line there from back in January, just above it at 3.9 pence. The other thing we're waiting on is an end-of-day close for the RSI above neutral 50 versus 47 at the moment. Onto a stock which has delivered the goods in the recent past, especially in terms of the initial target being hit there at 33 pence, above 33 pence. We're looking for up to 46 pence by the end of next month. Nice bull flag there above the 200-day line to hopefully get Staffline on its way. On to Tungsten West, which is actually in the model portfolio. I think it's around the 4 pence level, but can't quite remember. Here we've had multiple, probably a record number of bounces of the RSI at and around the neutral 50 level, so that's why we're excited about it. Above the broken resistance line there from April, 4.2 pence, looking for the top of the rising trend channel there at 8 pence by the end of next month. So let's see if that RSI activity does the trick. I covered Woodbois, which has been so far a falling knife and a rather painful one for investors, as you can see from the daily chart there, with promises of this is it, we're turning around. But at least today we've had another follow-on from Friday's price action, open at the low, close at the high, still tantalizing us with requiring an end-of-day close above 0.05 to take us up to at least the 50-day line at 0.08. and filling that gap there from back in February. Onto a stock where one or two people are claiming the credit, but I think I can fully claim the credit in the sense that Xtract was spotted in the wake of the gap higher and the push up after that. We had a rising 50-day line. Initial target here was actually 0.7 pence. The second one was a triangle there, 0.86, and the third target is now up to 1.3 pence. And hopefully we could get that by the end of this month. But looking good in the sense that we've filled that gap there from back in June at 1.03. So ideally we stay above that and head towards 1.3 pence. That's it from me today. More updates tomorrow.